Good evening, traders. Welcome to the channel. I'm right at the chart. Due to some works, I had to be off today, so I could not do pre-market analysis. I want to first see how the market will open. The market will open today from 6 o'clock. That is where we settle. I mark where we settle. So the whole purpose of this record is to just get our new week opening gap for this coming week, and then I will when I noted that, I will go to the monthly chart and then try to do the pre-market analysis before 6 o'clock. Welcome. This is the consistent profitable trader. I don't think we'll be here for long. I'm now seeing um, some range here, which we call a dealing range, that can be open. Okay. It will be used Friday. Friday, I think was. We are now in the September contract, and I'm looking for the market to open on the 1 minute charge closing price. Normally I put settlement if it is Friday, but I was not here, so I will just leave it like this. That is a Friday closing price, and when the market open, then we get some idea and to mark the new week opening gap, high or low, either premium or discount. Let us go with the weekly chart. I will do some high analysis later. From this chart, I am already seeing this is what we are looking at, a SIBI, obviously then a gap that we notice on a up close candle. It is a busy buy side imbalance, sell side inefficiency. The market does have the tendency to trade to these objective. I have this low, last week low. We can have also this high, and whenever we see, we already have told you in a lot of my videos, whenever we see long wick, the best is to grade them, for the algorithm is looking at these wicks like gaps. So this is last week high, and then I go to grade this. You grade it in the mean consequential encouragement of that wick, and because it is on a daily chart, we grade it also on the consequential. On the last week wick, and because it is a daily chart, we go and do with the other levels also, the 1255 upper quarter and the lower quarter. That's where we have from here. So practically for the weekly chart, the question that we ask ourselves, where do we think the week will most likely trade to? And for the answer of that question, we look at where it is, from where it come from, and how strong it leave there. So we see that price have come from um, this week and close here, open, trade lower high, and come from this premium last week low. We are going to be looking for price to trade to the consequential encouragement of this busy. If not, we want to see price open, trade, give us a Judah swing toward this consequential encouragement, and then drop to this low. For now, these are the weekly levels that we want to have on our chart. This is these two down close candle series of down close candle are also the opening price of it, or order block. You can have them also marked on your chart, the opening price. Just a bullish order block. And for now, these are the levels that we will be having on our chart from the weekly level. If we check the monthly time frame, we are looking at the market trading from this order block. This candle has validated this order block, this monthly order block, and is expanding and are expanding higher and close right here. So I will be looking for the market to drop either to this weekly and further. But for now, let us go to the 1 minute, and then after we define the new week opening gap, we will come and do some high time frame analysis, which we have just started. You have 30 seconds before the market open on the ESM. It is the S&P 500 September contract, and I think when I will reach the section to talk about the calendar, I will be telling you how we move from the one contract, which is June contract, now into September contract. 3 seconds, 2 seconds, the market open in premium. There you have it, and we'll go and define and just define it. And premium, take the Friday PM. If you see, take the Friday PM high, but we won't be trading from now until Monday after 9:30 or after 12. So just go ahead and define the new week opening. This is the opening price. So this one has closed, Friday closing price is a low of this new week opening gap, and this become the Sunday on 23. And we open in premium, so this is the high of this new week opening gap. Now price will be gyrating, we won't be focusing on it. We'll wait until 9:30 tomorrow, then we will look how the market have traded, what it has have done. For now, all you do is study order flow, get your plan ready, and have your mental, your psychology in place. Consequential encouragement, new week opening gap. Actually, you can say current They have trade, and whenever we see price have trade like this, we have some advanced theory that suggests this is a signature. Price will shoot up to reach this one first, but we will not try to predict price, nor try to do nothing right now. The only thing we are doing at the Sunday opening is we are defining the current new week opening gap. Current new week opening gap. This is the you won't be here for long, as we already have the new week opening gap of the S&P ready. Opening, yes, and a consequential encouragement. There is above this we have normally, if we would have traded this, we are above this we have buy side liquidity, and below these lows we also have sell side liquidity. The market is now practically in equilibrium. The market is in equilibrium, so we will be looking for the market to first rate a stop. Initially when it opened, it showed that it want to take this high, so we'll be looking for it then to trade and go lower, because it is a significant high. It is a PM high. It has engages to go and reach this relative equal high. We are not working with it. All we do is we have defined that we go to the Nasdaq and Q. The September contract of the Nasdaq, we want to define also this is where we close on Friday. It is the current new week opening gap. You have seen the Nasdaq did whipsaw and create, actually trying to create a range. I'm just talking about it casually, but we are not going to trade, and we are not engaging prices or rule before the Monday, the opening of price. For now, we are just making ready the infrastructure. This is also a low. We open also here. It is Friday. This one is a low. It opened here. It opened here. The opening price. It whipsaw and closed there. We have to shift this. Sunday 23 opening price. The opening price, and it is the high on the Nasdaq. High. This is one of the uncertainty that we don't know. So after the only after the market open we come to define it. It's one of the three uncertainties we as trader um, need to embrace. That is the opening on Sunday, and the one on 6 o'clock daily new day opening. Opening gap. It's the current. Yes. This one is done. Normally I don't mind putting, let me go. This is the opening gap at closing price is this. We don't trade it, we use it as barometer. That is the Dow Jones. So it's open, trade high, and you don't use it with, just make mention of it and leave it like that. I want to check also the EX, the dollar index. Why? Because I'm looking at the the risk off, risk on scenarios. If price is going higher on the dollar, expect price to decline on the other asset classes. These are two smooth levels, so we can expect price to come to wipe these relative equal lows and trade lower, meaning that we will have the other assets will be going up. I think on the weekly chart, we need to tell you something about what I'm expecting of this week. We have this new week and this information on our chart. What we will be going to do is to I'll go from the weekly 1 week. You already had some information already on this chart, and actually this is all we need for now. As the market trade this coming week, we will be looking at it. What I'm expecting as I'm expecting is last week. I'm expecting price to trade to this busy, but first to make a high either to this lower quarter or to the consequential encouragement, and then trade lower, trading toward the series of down close candle. That is what I'm going to be looking at a price. Not giving up on the 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 seasonal influence. We are now in the period where we might see a large range consolidation taking us into some fall summer low, and then another fall seasonal low, for us to then rise in from um, October onto the December high. So I have, as I'm looking at this chart, I'm looking at a range where price most likely can be trading these weeks in a range trading, and trading in a range. This is range bounding. We are holding this information believing that we are actually um, most likely going to see some retracement, which maybe till this series of down close candle, which is from this perspective and propulsion block. We can, which is from this down close candle and then start rally again. We will be seeing it not this week, not next week, but this is what we will be expecting from Friday. If it gives us this week, we will be happy to see it, but price may drop lower, but first rally give us a small rally up to the consequential encouragement of this week. If it did that, does that, then I will be expecting it to drop, give us a bearish close. If not, price can still going higher in line with with what the market maker is now doing. We are actually going to book 8. I changed the background. This was book 7. I changed the background, and now I will be working on book 8. Oh, I'll go file, new. This is a work you are doing prior to, before the market open, but I was away, so I could not work on the chart. I want to take this algo picture, copy, place it on the first page, and then want to go and take this copy, place it on the second page. This is how I construct my books, and I want to have this disclaimer. I will be looking for some more extensive disclaimer, and but for now I'm using this simple disclaimer, and I am asking everyone to pay attention to it. And we just got the weekly annotations. We just got the weekly annotations. I will be going and do the monthly very quick. Try to check what the monthly is telling us. The monthly perspective. We've seen that price have dropped, have trade from this order block. This, here you have it here. This is monthly, and you are looking it with red, as if we are now having some trouble with, I think, some storage storage things. Let me close it and check what it will do. It will do. And then very quickly, if we have this monthly and the weekly, we'll go to do some dimension. What is also best is whenever I see these kinds of order block, I also order block, I go and take the mean threshold of that order block, having that also on my chart, which is threshold of the order block, and this one is a busy buy side imbalance, sell side inefficiency. This is the monthly chart. I think that is enough on what is on our monthly chart. This month have not yet finished, but I have last week high there. We might, from this perspective, we might continue to go high, or price may use these 2 last weeks or this 1 week to trade toward to make efficient this imbalance. If not, price may continue from the monthly perspective. I'm looking at it for it to expand higher. So there is still a bullish, monthly bullish idea in the marketplace. So I'll be looking on the week, like how I, I mentioned. Let me take a picture of this one and then we go. So I built book 7 and book 8 is now being built. I will be going I'm going to close. Let us properly do this. I'm going to close this video. This is what we have from the monthly perspective, and we are looking at it to expand higher. This is the weekly. We just have the weekly. Just have the weekly, and we are looking at these. We are going to look at these levels for price to trade through. Already we see price react from this order block, the high of this candle, and trade higher. We are expecting price to drop at least to this consequential encouragement of this busy, which is, if I look at the range of opportunities, about 70 handle. Okay, we are looking first for it to go up about 25 handle to give them a Judas swing, or it may drop the 70 handle and continue. Seeing what the monthly chart have done, it can continue going up bullishly. I am not that too strong in that idea. That is my opinion. It's my idea. I'm looking at the seasonal influence, and I'm holding at the time of the year that we are in, expecting that we will be seeing some large range consolidation to make a summer low and to go to a fall low, to then rally stronger toward December. But this is the United States of America election year, presidential election year, so you can expect everything. Price can continue going further. If you will continue to trade higher, going higher, be nimble. I will be using this level to see if on lower time frame the market is giving me opportunity to step on these levels, like market to trade to this high, this previous week high. If it trade to it, let me mark that one also. Previous week high. This week, 2 weeks ago, um, 2 weeks ago high. Yes, we are now in this one. So it is last week, 2 week ago high. The 2 week ago low is close to this order block, so I leave that, do not have too much line on the chart. But if the market can trade to this week ago and continue the notion, I'm not too strong and that bias. I'm looking more for the market to trade up and going to the BC, and how it trade on this BC, about 70 handle around this BC, will tell me if we will continue going further. I'm going at the daily chart. It's a quick high time frame analysis. We are seeing that there are levels on the daily chart that already are apparent to us, giving us the story of the delivery. We are looking at this level being a busy, this level being a busy, and we are seeing right this weekly buy side imbalance. Right above it you have these volume imbalances. These may use as um, reason to draw price to them too, so it is good to be watching. There is also a busy right here. I'm not going to mark too much. The overall picture, as how I'm looking at it now, price may drop to this busy, being this weekly, this daily volume imbalance. Market have made trade through it, but there is no body covering them. They are serving as um, strong draw of on liquidity. Our price may trade from here going up. I'm looking at this being the last up close candle before this down move, this being a better order block, which give us the room, bearish order block, which give us the room to think that price may rise and not reach the consequential anchor. Even if it will spike, we want to see if it will close below the main threshold of this candle. If it close below it, it gives us a room to speculate and reason that price will go to the downside. Not forgetting that we are in a season where we can see large range, so it might be not the end of this move, but just a retracement. And the other side, gun to my head, like the the mentor used to say, I'm favoring this move to the downside, but I'm not leaving out that price may just retrace into this BC, this 4H BC, and continue going higher, given what is being pushed by the market maker, giving us price. It's the 4H for those that trade intraday session. Definitely the 4H is a time frame we need to spend time analyzing, and we are looking at here. This is a SIBI from the 4H perspective. SIBI price have already engaged. One high taken out, another high taken out, and a displacement on the 4H, taking some swing low here, create a SIBI. This seems to be more the model 22 on 4H level, but we are expecting price to open tomorrow, rally toward the SIBI, and then and then because the SIBI would be the weekly wick consequential encouragement and then drop lower. Even if it is entered in institutional order flow entry drill, it will be very great for us, but there is already a displacement. I'll try to make it, this is another displacement, and this is where we have also another order block which has been traded through Friday. So I'm going to be looking mainly for shorts, focusing first on these level, this low as a swing low, and that one, and this swing low. By now I am looking if this was a market maker sell model in larger scale, which may not be the case. I'm just have the custom that I'm looking at every swing to possibly see if that is the case, the development of that model is the case. This is a 4H, and then we go to the 60 minute 1 hour candle, which is giving us room. We are looking at price level kind of consolidating right here. We are expecting coming from the 4H price to rally, continue to rally to purge these buy side liquidity about which we have buy side liquidity above these swing highs, continue to rally and to come into this 4H. It is a SIBI here, it has been traded. There is a small inefficiency there. There is a small pot that have not been traded to right here within this SIBI, so we might see price trade to this area. I don't expect it to go all the way there, but if it go there, it's not wrong. What you do is on the 60 minute, I mark out significant high and low. It's like the 60 minute, there is a high here and there is a low here. There is also a significant high and low, and you can trade in that range and be successful. This wick, what we are having here, and the market closing below it indicate we are going down. It is a signature that I like to look at whenever I have long wick, that we will be going down, but I think price will first go to do some stop rate and then trade lower. We are practically now in a consolidation, very messy, high resistance level flow. All I will be doing is give here a mark 60 minute, which is a swing high where we have buy side liquidity above it. There is also one here. There is a SIBI right here, 60 minute SIBI. It has been traded through and engaged. So the 60 minute has been worked out from this perspective well. SIBI, there is above it another. We might see price go toward to engage it. If not, there is room to hold on the bearish side of the market, and here we have some first liquidity that we can be looking to see purge is this. This swing low, below which you have sell side liquidity, and it is in this daily SIBI, this daily busy. So price may want to trade lower, we'll be looking for it, and when we reach this swing low, actually going to this rejection block, when we reach price trade to this rejection block, we must be cautious and see how we trade to this consequential encouragement of this weekly um, weekly BC before we take some action. Remember, this is a 2 week ago high, and price have already traded to it from the 60 minute. It trade to it, rejected, go and make rebalance this SEBI from the 60 minute, and now what we are looking is for price to shift this market structure and continue to trade lower. So this is how we have find an idea, a high time frame idea, going from higher time frame, monthly, weekly, daily, 4 hour, 60 minute, and now we can actually go to a 5 minute, 15 minute to see how it is been working out. We see the 60 minutes is right there. It is clear for us on the 60 minute that we are going lower, and the way it is worked out, you see one high, another high, this one take these two into a 15-minute SEBI. This is definitely a displacement. We see this high, we only need price to rally and take this high practically for it to collapse. The price may trade onto this 4/8 SEBI, which is also the weekly consequential encouragement of the week, the last week. Let me have a close by. If I think we look at the hierarchy of these are weekly levels, so we want to see what price will do around them. This is a 4H order block, bearish order block. Price may trade to it. It is right at a above these buy side, and it is right at a SEBI. Price may want to trade to it and drop to the side. Either way, we have now our idea with which we will be hunting. That is, by this analysis we find out our idea with which we will be approaching the market, and we'll be looking to use our models to engage at the right time. That is very important. We just have the opening. It is a Sunday opening, and we will be Monday, on the Monday midnight price. When price and time confluence come into one, agree to one at a certain time, we see certain price, we will engage and take some trade. So for now, I just mark Monday, and normally the protocol is that when it is as this, price is in a equilibrium of certain range, you just wait, allow the market to trade in the AM, and wait till after 12 o'clock, and then go to look what the PM has done, more to see how the market maker have engaged, have manipulated, and have worked with the minds of the trader, manipulate the sentiment and what side they have chosen. We just wait and go there. What we can look at is the calendar to see how the week will be. We have Monday, FOMC members speak. It is a high medium impact news driver. We have Tuesday also news, Wednesday news. This whole coming trading week is news day. PMI Friday. I will be very careful whenever I see FOMC speech that is on 4 o'clock in the morning AM. So after 4 AM session, after AM 4 o'clock, I will be very cautious. So the best is to allow them to work this news driver and then check what you can find you could set up during the week. But the week is very good. Due to something about my storage which I have to go to fix after this audio, I can do the copy and put it on book 7. This is book 7. I'm opening book 8. Be saving it as on the desktop. I will call it logbook 8. And save it such. I close logbook 7, and then I will be working with logbook 8. When I'm done doing the analysis, the cleaning of my storage, I will come over and do some writing on the higher time frame news, making some personal notes for that idea. That is what I have for the whole week coming. We have entered into the September contract. It is bar chart. Then you go to barchart.com. You go to the select commodity. You scroll select commodity, open. Just let us wait. We select commodity, we scroll down, S&P 500. There is where we open the chart. We look at this S&P 500, not the first one, that is the cash, and we focus on the open interest, and we are looking at this September U. We were in June contract, that was MHM. H is March, M is June, U is September, Z is December. Now we are for this year on the U, the contract month September, and we see that there is open interest, there is interest to fall. This is how we choose which contract month we choose to trade with, and I think this is clear. It's not too much technical things on this. It says that you choose the one with the greatest open interest, the one with the greatest open interest. That is where you choose to trade. It is where you have more interest, more money flowing. That's it. I wanted to show you why I'm using U, the letter ESU. Is now we are on the September contract. Normally what I do, I'm trying to read the chart naked. So when I mark one, I mark the S&P, I am going to NQU September contract to the 2024. Then I leave this a little bit open, a little bit naked. So if I want to come and trade it, I can do some naked trading beginning from the 60-minute. I will be doing like this. After the market open, I'll go to the 60-minute and mark these highs. This one I'm seeing it, this one I'm seeing it, and this one I'm seeing it. So I will be looking at the market to trade to clear these high into this SIBI, little bit more into the SIBI, and then drop to this side. The 4H is the same thing that we have done on the the SIBI. I'm expecting market to trade 1, 2, 3, 4, 5 highs or here. So I'm expecting the market to trade and engage those liquidity, but just nimble. If you want to trade it, trade nimble. The reason why is we are seeing this long wick and that the market have closed below this candle, have closed below the consequential encouragement. I always record that as a signature for me not to be going lower. So we are looking at the price of rally, engage buy side. This is an you can call balanced price range. Take these lows, drop aggressively in a and swept a swing high. This is shift in market structure for me. I'm looking for price to go to these relative equal lows and to continue to close this busy from the 4H. The 15 minute. Yes, that is what I will be doing, and I will from here. I think on the 60H, I normally do the SMT diversion, meaning I will be monitoring the dollar index. Excuse me. I will be monitoring the dollar index and want to see the dollar index continue to go higher. If the dollar index go higher to above these, it permit the future index to trade lower. But if it goes down, which is risk on, with the fiber, which is euro USD, it's mark to market. If the dollar go high, we will see this one go lower. Practically we are seeing relative equal high here. We are expecting the dollar to go down for a bit first to engage these relative equal lows, trade into this first SIBI, and then drop lower to engage the liquidity that is below this one. Also for the GBP, the cable GBP US dollar, these are the only forex chart that I am monitoring. I'm looking for price to continue to go lower, but that means that the dollar index has to go up, so that we can have the risk on scenario. The gold, to complete the analysis, the gold dollar, we see gold is dollar index versus gold. They have an inverse relationship. If the dollar is going up, the gold will dropping, which is what we have seen, and I'm expecting the gold to continue to drop to these levels and continue to go to trade the and trade these sell side liquidity. I want to check the bond. The bond also, treasury bond is also one of the major market that I'm looking at. I'm expecting price to just open trade to this volume imbalance and then drop to the sell side. So it seems for me, I will be looking for sell side objectives and trade them. There is also crude oil, those that trade crude oil futures. You can see price trade with institutional order flow, give us a rally to engage the buy side, drop aggressively with displacement to take this swing low, leave a SEBI. We already have trade into this SEBI. It is definitely that price is going to trade to this consequential, this busy, and to also reach toward this on this light crude oil chart. For now, I am focusing on the S&P. Yes, this yes, the future contract. This is where we have done conduct our mark. We'll go on the 15-minute. This is what the market already have done. It is still around the new week opening gap, and we go on the 5-minute. This is the time frame we use to engage, to take our trades, and we use to I'm using to take trades and to engage the market. On the upper side of the, I'm seeing price now on the upper side of the new week opening gap. I'm expecting it to either rally a bit to engage this one, or first this one and then continue going lower. I will be going to look for lower prices. A very messy chart projection at the end of last week. I'm go to the 1 minute where we have started. Yes, price is on the upper side, and price have left relative equal highs. These highs, you will be expecting price to run through them maybe in the London or some days, and then take us to lower. I want to do something. Anytime that I trade, I take trades, I use paper trade, and I had this is for book 8. I'm taking now another, I will be taking another 2000, and I think this one have done well. It's 1 2 3 4 5 6 7 8 9 10 11 12 13 14 15 17 18 19 20 6 loss from 20, so around 60%. We have made it. This one, what we will be doing is we will go and clear this, reset this account, and I want to reset this account. It moved from, I think we took it from the 20th, the 10th of June until last 20 day. For 10 days we have this contract, so I want to reset this one publicly, and then again we will take a 2000 and reset. So we will be starting trading and starting hunting, starting building this book 8 with a new reset account, paper trading for educational purposes. And I hope that with this analysis, brief, but I think it will help those that will be looking at it for entertainment purpose and for their own benefit, to study educational purposes, that they will enjoy and enjoy this this record. I'm greeting you once more from Suriname, and this is the algorithm that I am now in the process writing. Welcome, start your own algorithm programming and work with with me on the channel. I think some information from the channel. We are growing steadily. We are growing steadily. This is the channel. We are growing steadily. We'll be now posting some more content from the September contract. So bye for now. Goodbye. Have a nice day and nice evening further.